of the money in the U.S. stock market is invested through mutual funds, which are taking in money at a torrid pace. Just last month, investors added $60 billion to their mutual fund accounts. But despite all the new money, mutual funds are still in hot water over abuses involving late trading and market timing. Congress could clamp down on the industry by limiting fees that funds could charge and commissions they could pay. But how can this mess be cleaned up? Longtime national talk show host, newsletter writer, and author Don McDonald has followed the mutual fund industry for years. Please welcome Don McDonald to Serious Money. Welcome.
Hi, Tom. How you doing?
I'm great. Thanks for taking part. Let's talk about the mutual fund industry. $60 billion moving into funds in January. Investors trusting the market again. Should they be trusting mutual funds, though?
Oh, they should have been trusting mutual funds all along, generally.
What are some of the, when you look at the scandal, what do you think the real problem there was?
Greed. Greed, absolutely, lots of greed.
But what were the things they were doing wrong that really stand out?
The problem was the industry was going through a tiny contraction, probably for the first time in anyone in the industry's memory at that point, except for maybe John Bogle, who's been there since the beginning of time. Companies like Janus were seeing outflows. They were seeing their assets under management decline. And so somebody said, how are we going to get a little bit more money? And I do mean a little tiny bit more money. And they came up with some schemes to attract more capital, and they got caught.
A lot of publicity, but in the end, are those scandals going to end up costing investors a lot of money?
No. The net cost to investors is negligible. There's not going to be a whole lot of expense. As a matter of fact, the numbers are being bandied about are pennies per shareholder. You're going to get a couple of cents back from these guys. It's not a lot of money. But what it did do was it damaged a decade, 2 decades of really great credibility that the mutual fund industry had built up, particularly the no-load side of the fund industry. They were perceived as, and for a lot of good reasons, as a very clean, safe, reasonable means by which to invest. And they just threw that goodwill out the window.
No, but if that's true, if goodwill is gone and people don't trust the industry, why are $60 billion going into mutual funds in January?
What's your choice?
There's ETFs.
ETFs are one option, but they still confuse people. They're not real confident in what they are and how they work. They have to buy them through a brokerage firm of some kind. So there's that other relationship. There's a lot of mistrust of brokers. With mutual funds, you're able to, particularly no-load funds, you're able to go directly to a fund company. It eliminates a middleman. It makes people a little more comfortable.
Do you like ETFs?
I like ETFs, sure, absolutely.
As a good alternative?
As a good alternative to mutual funds. If you can buy them right, you got to make sure that you're not paying big commissions. You've got to buy them through a discounter and keep those costs down. Because when you're investing, it's all about cost. The more money you spend, the less money you make.
People don't understand that very much. Instead, they look at returns.
Right. No, it's not about returns. It's about spending less. You'll make more. The returns are, what's great one day is mediocre the next to pathetic. Janus was the best, they were the worst. You fall from grace, it changes.
It can change quickly. Let's talk about some of the things that may come out of this whole mutual fund mess. Some changes are being suggested. One of them that's working its way in Congress right now is getting rid of the 12B1 fee, which is a sales commission charge. And I didn't realize that 2 out of every 3 funds have a 12B1 fee.
Right.
Is that something that should be eliminated, or is that a necessary evil?
12B1 fees. 12B1 fees were one of these big scams pulled off by the Investment Company Institute, which represents the mutual fund industry. They went before Congress and said, you give us a marketing fee. You give it to us. You let us charge this and kind of hide it so it doesn't look like an expense. You let us hide it over here. Call it something like a 12B1. No one will know what that means. And we'll bring in tons of money. And when we do, fees will go down. Well, they were half right.
A lot of money came in.
Oh, man. The mutual fund industry, since 12B1s, grew by 60-fold. 60-fold.
Well, but let's talk about internal expenses. I mean, are about 1.5%. Is that too much for people to be paying?
That's too much for people to be paying.
What's reasonable?
It's pretty substantial. Fair? Well, it depends on the fund. There isn't. What's fair is it varies from fund to fund, from type of product. But what's fair is to let people know exactly what they're paying and for what they're paying it. That's all they're.
Well, don't they do that right now? Isn't that in the prospectus today?
It's in the prospectus, but it's not real clear. It's hidden away. And a lot of the fees aren't disclosed in the prospectus. You have to go to annual reports to start digging for the cost of trades and a lot of information that should be very upfront. And the problem with 12B1s is that 12B1s were used as not just a means by which to pay for marketing, but they were used as a trick by the full-service brokerage industry and the high-load mutual funds to make a mutual fund appear less expensive than it really was. A way to hide a commission and get it back every year over the course of 5, 7, 10 years.
Another thing people have talked about out of the scandal is maybe trying to keep mutual funds smaller. Are bigger mutual funds necessarily bad news for investors?
Not necessarily bad news. It depends on what the fund is buying. A gigantic, small-cap tech fund, probably a problem, because you're going to end up with huge positions in a lot of companies that you don't want to have giant positions in.
What would you like to see come out of the scandal, the investigations, Congress? What would be the best thing that could come out of this for investors?
Right now, there are two bills, one proposed by the House, one passed by the House, and one in the Senate. The House bill is wimpy, and it was ICI approved.
ICI being?
The Investment Company Institute, the trade group. They represent the mutual fund industry. And they're complicit in this whole thing because they won't actually admit the mutual fund industry has problems and needs to fix them. There's a Senate bill, and I can't remember who the sponsors are, but there's a Senate bill that would eliminate the 12B1 completely. It wouldn't require better disclosure. It would just get rid of it.
Are they going to find another way to get that money in, though?
Yeah, in the expenses,
okay,
which is fine. Say we're charging 1.5% per year in expenses, not 0.5% in expenses and 1% in the 12B1, which doesn't really count.
So you'd like to see that?
I'd like to see that. I think that as part of that proposal, they're also going to eliminate the soft money deals with the brokerage firms, where they would charge more in those fees for transactions that are hidden away, and they would get free research. This bill would require that they pay for the research, that you show how much you're paying for the research, and that be disclosed again in that expense ratio. Everything just be in that expense ratio.
So more transparency is what you're after.
Real transparency. Not better, and I think you'll get better disclosure by eliminating the ability to hide things deep down in the reports.
One of the things in mutual funds that always surprised me is how little people use indexing. Not very much of the whole picture is indexing. Are we down the road? Are we going to see a change in that percentage? Are we going to get
already seeing it? There's a lot of talk about index funds. There are a lot of index funds out there. There are a lot of groups doing index funds. Vanguard made it popular. Vanguard is growing it like crazy. I mean, Vanguard is amazing. Vanguard's an interesting company. Vanguard's fees dropped over the past decade. Everybody else's went up. You know, since 12B1s, Vanguard's went down. There are honorable mutual fund companies out there. They're one of them.
And how different does this industry look 5 or 10 years down the road as a result of this scandal?
Oh, it's going to be better than it was. And I think that's part of the reason why people are putting money in. They realize that. They know now that if you're running a mutual fund, you got to be squeaky clean because you've got Spitzer watching. And so anybody who's in the mutual fund industry and is pulling the little shenanigans they were pulling before is out of their mind. They're just lunatics.
Don McDonald, thanks for joining us on Serious Money.
Thank you.